Gautam Trivedi joins us. Let's connect with him. Let's understand his view of the market. Where is he finding value in this market? And well, Gautam, good morning. So nice to have you back. Well, you're always smiling, but today you're smiling with a big smile. So is there something which we need to know?
I don't own any of the Adani stocks, so that's a loaded question. Let me put that straight away. I'm smiling because it's just another good day.
Yep.
No low AQI and low pollution, so that's why I'm smiling.
Bombay is very clear actually. I mean, thank God it rained over the weekend, and the AQI levels actually last I checked were sub 100, and I don't remember
That's
last
right.
time when we had this kind of a number.
Exactly.
But it's not looking all that clear when it comes to markets, right? It's very foggy. Valuations are just not stretched. You really have to do a lot of hard work. It's like a Delhi fog right now. You really have to work hard to keep yourself safe, right?
That's right. I was in Delhi last week, right? It's, I think ranging from 350 to 450 on the AQI. And yeah, it was extremely foggy. But, here's the thing I want to share with you guys that I was in the US until a few weeks ago, and I met a whole bunch of institutional investors, discussed India at length and India versus China, which invariably came up. So I think the verdict was very clear that there's a lot of anger against China from an equity markets perspective, and a lot of people have obviously not really made any significant money in the Chinese markets for the last several years, and India, of course, has gone only one way. So as a result, I think the bias, the preference for India is undoubtedly very clear. Having said that, the single biggest hurdle that I saw was the valuation, in which at 20 times calendar next year, PE will still remain the most expensive large economy, large market in the world, which is not a surprise, but it seems to be a hindrance from especially US institutional investors to now incrementally put new money to work in the market. So even if you look at since the highs of September, we've seen almost $5 billion of selling. This month also, we've seen sub 100 million of net buying, which is really neither here nor there. So I think that these are things which I would be concerned about from a foreign perspective. But of course, on the domestic front, we've seen $20 billion of net money coming into the equity markets. And I think that almost 2 billion of net flows from retail investors into domestic mutual funds, I don't see that slowing down, frankly.
But while I completely agree with you that the India appeal is so strong and money will come to India, but we've been talking about this theory for last 12, 18 months now. Where are the flows? Where are our friends? When will they come back?
I think we need to have a correction. Personally, I think a correction would be very, very welcome. There's a lot of fraud in the market. A lot of stocks are extremely expensive, and yes, we can stretch the timeline and say, oh, in that case, let's look at this stock now from a 3 to 4 year view. Let's not look at it from a 12-month view. So most sell side research today is 12-month oriented from a target price perspective. They do have modeling for the next, FY26 up to FY26, but I don't see people being able to confidently say that now is a good time to buy the broader market because it is expensive. And I see a lot of research reports out there that maybe overweight India, but little confused on what stocks to actually put money into.
Okay. If one looks at your current ideas, top compounding themes, real estate, financials, and EMS. I'm going to keep financials aside because that's something which you've discussed last time. But why real estate and why EMS? Because EMS is something some would say in terms of valuations has already run up. Most of the EMS stocks, and just few of them, 4, 5 of them, they're trading at P multiples of 40, 50 times already.
Yeah, so the EMS companies, I think, are where the Indian IT sector was 25 years ago. If you just look at even the absolute quarterly numbers which came out for the second quarter, the aggregate revenue was up 28% year on year. EBITDA was up 19%. PAT was up 24%. And these are not 4 to 5 companies. There are now 9 companies that are listed, which includes Amber and Dixon Technologies. I believe there are another 4 to 5 when I speak to investment bankers. Another 4 to 5 that will IPO very shortly. So the universe is only expanding, as did the universe of the Indian IT space. over the last 25 years. So I think this is a space where you will see incrementally more investments coming in. Literally, China plus one. If you were to pick one sector in India that will benefit from the China plus one, it's definitely this. So I think you are seeing increasingly MNC companies wanting to diversify. I mean, Apple being the poster child of what they're doing now in India, $4 billion worth of exports. Again, a small fraction of their 400 billion of top line. But the fact is, that's a great headline to have. And you'll see that number only incrementally going up. So hence, I'm very bullish on the EMS space.
Okay, fair enough. That's the rationale over there. Let's chat about another compounding theme, and that is auto. And, at a time like this, a lot of these companies have been acknowledging that the festive sales haven't been all that great. A lot of companies resorting to price hikes, talking about inflationary concerns, raw material prices going up. What's the outlook there?
I think the auto sector is another steady compounder, and I don't mean only just two-wheelers, even passenger cars. So I was reading the statistic literally this morning, which startled me, and it said that of millionaires in India, only 4% of them actually own luxury cars. So versus the West, which is where the figure is 60%. So I think the runway of people incrementally buying more luxury cars, whether it's BMW or Mercedes or what have you, will clearly be a huge positive for some of these companies. If you look at the numbers for Mercedes as an example, they've incrementally for the last several years only been going steadily up. So to the extent that the global CEO of Mercedes said India's for the next several years going to be their fastest growing market. I mean, fastest growing in terms of not volume necessarily, but percentage growth.
Gautam, I want to ask you whether there is any tactical positioning or you think that would be the case, be it for the state election results or in the run-up to the 2024 big one, elections?
Well, I think, I don't like commenting on political outcomes and what may necessarily happen and how the market should react. But what I have said in the past is that if for whatever reason the BJP or the NDA do not come back to power in the 2024 elections, my view is it'll be the two best days to buy India, because that's when the market will correct. And, people who have that foresight have a vision of, where India is going to be 10 years from now, no matter which government really comes into power. I think those should be the two best days to buy the market.
If markets don't fall, then what should one do? I mean, what we're trying to perhaps understand from you is, okay, fair enough that if markets fall, you should buy them. But to buy, you need cash, which means you'll have to take a tactical call of raising 10-15% cash in your portfolio. Would you do that? Should one do that?
Ahead of the general elections, lightening up would be a good idea, because if for whatever reason the NDA doesn't come back to power, again, I'm not taking any sides here, but that's narrative that I hear from a whole bunch of market participants, including the ones offshore. And in fact, that was the one question that was asked repeatedly on this trip to the East Coast when I was there a few weeks ago, that will Prime Minister Modi get a third term? So that was clearly a concern besides the valuation, and concern in a good way, in the sense that if he were to come back into power, they would incrementally look at putting more money to work. So I think, yes, lightening up a bit prior to election results would be a good idea.
Let's look at something which is in the public domain, something which we've discussed in the past, your top holdings, Varun Beverages, Landmark, Inox Wind, Sampanda, Sampanda. Have your top 5 holdings changed, or are they still intact?
These are top 5 holdings on a mark-to-market basis. So these are actually companies that we, I guess that we are a bit more of a special sits fund. We do look for steady compounders as well. Varun Beverages, interestingly, was a special sits which became a steady compounder. Landmark Cars, as you mentioned, as I spoke about, the auto sector is the other story. Which, so sorry. Hi, can you hear me?
Yeah, go ahead.
Yeah. So I guess Landmark Cars is the other sector where we just discussed about the auto space. Inox Wind, I think that's again a special sits sort of investment, because if you look at the government policy that's changed favorably towards wind, because focusing too much on solar of the grid, given the fact that solar energy is only available from 8 o'clock in the morning till about 4:30 or 5 p.m. in the afternoon. So you need to have a hybrid strategy of solar and wind, which is the reason I think now the government's going to be auctioning 10 gigawatts of wind projects every year for the next few years. So these are some of the triggers that we look for in companies, and I think these stocks will remain our core holding. The other one is Spandana Spurti, where the special sits or the incremental trigger was the fact that they got a brand new team led by Shalabh Saxena, who came in from Bharat Financial at Indusin. So that, and he's made significant changes, brought in, it's not just him and the CFO, it's a team of 10 to 12 people who've come on board to change the way Spandana has been doing their business.
Gautam, let's get in a quick take from you as well as to what the outlook is when it comes to new age tech companies.
You know, I think that's a good question because I've been asked this before. And, you know, what I guess the initial IPO reaction to a lot of these companies last year and early this year was pretty brutal. And I think that's also the good news is it's also impacted the valuations in the private markets because at the end of the day, let's not forget the valuation of Indian tech companies, be it private or public, are influenced by the valuation metrics of similar companies in another country, i.e. the United States. So my view is that these companies or the market now seems to have, I guess, figured out a bottom for a Zomato or a Nykaa or a Policy Bazaar or a Paytm and said, okay, this is it. I don't think these stocks deserve to fall any further. And hence you've seen that rebound in Zomato. So I think the market's now starting to accept that there is a certain different valuation metric we should be applying to the new age tech companies. And I think, you know, what I've said in the past on your channel is these companies are changing the way we live, whether it's a Zomato, whether it's, you know, insurance online, or you're using your Paytm account to purchase goods. So I think these companies are changing the way we live, the way we behave. And going forward, I think these are companies you want to keep owning from a longer term perspective.
Really appreciate your time. Thank you so very much for joining us.
Thank you.